Okay, so we have a tradition of starting on time, so let's follow this tradition. Let's start on time as we always do. I welcome all our participants of this meeting, and I welcome our speaker, who is a professor at the University of Oregon, Maria Chaderina, an old friend of mine. Hello, Masha. We will talk about personal finance today. And I would like to emphasize that financial literacy and personal finance is an essential part of the mission that International Economics Olympiad is following. And we think that economics as a subject, economics as a science and as a, the field of study is wider than just supply and demand, wider than economic theory itself. Of course, we have economic theory tasks in our Olympiad every year, but financial literacy and managing your personal finance is also a part of the International Economics Olympiad. And maybe it is an essential part because this is something that you can apply immediately in your everyday life. Economic theory is also important. It's important to understand how the economic systems work, how the different forces of economic activities of countries and people interact. But financial literacy is something that you can use immediately, and you can advise your parents to use the wise strategies of managing personal finance. And this is something that can save a lot of money for you, and not only save, but also maybe earn something. So I'm very glad to welcome our speaker today. Again, it's a professor of the University of Oregon, professor of finance, and the member of the jury of the International Economics Olympiad, Maria Chaderina. We'll have the following structure of today's meeting. Maria will talk for maybe 30 to 40 minutes about the personal financial management. Feel free to ask your questions either in the chat, if you're following us in Zoom chat, or in the Q&A window in Zoom as well. I will read all the questions and I will summarize them in the end when we have Q&A after Maria's talk. Also, there are a few questions which we received before the talk today and during some previous days. So we have a lot to discuss about personal finance. So we will finish with our Q&A session after Maria's talk. So feel free to feel free to ask your questions in Q&A or in chat. So I won't take any more time because we have important issues to discuss. So Maria, the floor is yours, please.
Thank you, Daniil. It's really my pleasure to be here and to share my insights, my knowledge, my expertise with you. I'm really excited to be here. So just to make sure that we have a two-way communication, I would really ask you to spend a moment and type a plus into the group chat so that I can see that you are here and that you're ready to listen and that you are maybe as excited as I am to be here and to learn something new. Okay, I see Artyom, Daniil, Masha, Aranza, Esfa. Yeah, and by the way, if I'm mispronouncing your name, pardon, my bad. I'm really trying hard, but it's a cross-cultural environment, so naturally mistakes can happen. Nishta, Andrei, Connor, Adam, Commander. That's good. The team is here. Wonderful. Okay, thank you all so much who already said hi. Nice. So what am I going to talk about today? Well, as Daniil already said, money is a very important topic. It's some say it's a subfield of economics, and that's how I went into the financial management, into the finance. So I have an economic background, but during my studies, I realized that it's really kind of like the topic of money drew me in there because I saw how important it is for the functioning of the economy. And the best analogy that I can draw to illustrate to you what function money serves in the economy is to say that it's like a blood. It brings the resources necessary for the whole economy to function to its particular subsections. So really what finance professors, what finance professionals do, they're like cardiologists to the economy. They really make sure that the flow of resources, that the flow of energy is there to make sure that the successful projects happen. Yeah, and sometimes we have photo like the Zoom bombing, and I must say that I've been teaching for the last 6 months online, so these things like this happen from time to time, and well, this is the new world. Please just ignore this thing that has happening in the chat. Bad things happen sometimes. Okay, so back to the cardiology. So what I want you to think about, the way I want you to think about money is to realize that it's a very important source and like a very important resource. And it's really important for the well-being of the economy and you as an individual in it to realize that to kind of to master the skills of managing it. This is kind of like a cardio exercise for you as a as part of your healthy lifestyle. The same way managing money in a smart way is also going to bring you kind of like the analog into the in the financial world. So the healthy habits in relation to the to how you manage money, how you interact with the economy. Okay, so from my point of view, what I'm going to tell you about today are the SMART goals and strategies. So SMART is not just a word, it's an abbreviation. So I'm going to open up this abbreviation and tell you what exactly I mean by SMART. And I'm going to tell you about a simple investment strategy. This is really the only strategy that you need to know about as a retail investor. Okay, so and by retail investor I mean like mom and pop or like yourself as an investor. And I'm going to address some of the Q&A questions that I received, and we'll be happy to take more questions. Okay. So why should you listen to me, and who am I, and why what I say is trustworthy? So like, should you doubt me? Maybe. So tell me my story, but I'm confident that what I bring to you is based on my personal experience, as well as the expertise from around the world and the top professors that I had the privilege of working with. So who am I? I was born in a tiny village in the northern part of Russia in a rather poor family that lived paycheck to paycheck. My mom raised me, so it was just one paycheck family, which was quite hard living. And my relationship with money didn't start on a good note. Trust me, I was afraid of money. I didn't know how to really manage them. And this was really like a low start. But at the same time, it gives me a lot of perspective and compassion when I work with people who don't really understand money, who are afraid of them. Because I can say that I can relate to those problems. I went through all of that myself. And then I went to college in Russia. And then after that, I went to get my PhD from Carnegie Mellon University, which is one of the top universities in the United States and around the world. And I had the privilege of studying how to manage money from the best, really the best experts in the world. This, apart from doing my academic job, which is teaching, for example, my expertise is corporate finance and investment strategy. So I teach, essentially, I prepare students to be finance men, kind of the portfolio managers in hedge funds, in investment funds, in banks. So this is my main job. I prepare students to manage big portfolios of money, okay? On top of that, I created a social outreach program, which is called Invest in Your Dream. It's mostly targeted at Russian audience to give back this knowledge, okay? So the knowledge about money back to people, people in my home country, which is Russia. Okay. So what are the big insights that I want to share with you? So first, 3 big insights that I learned when I moved from Russia to United States. And the first thing was kind of like all of the disillusionments. So 3 big disillusionments. The first I had was consumerism. I often thought of United States as being kind of driven by this eagerness to buy, to kind of focus on material things. everything is for consumption-driven world. And I was really surprised to see that it's not the case. So at least in the highly educated circles where I ended up through my PhD, through studying for a PhD, I realized that really the people around me are not that focused on material things. They're actually driven by their desire to make impact. Of course, they like comfort, but it's not their goal in a way. So they often trade off like buying an expensive, much more expensive car than they have for like the comfort of just having what they used to, and making sure that they spend the rest of the money and the time and the effort that they have helping people, making impact in their lives. And that really motivated me to rethink how I think about like, okay, so what do I think about my money? What are they for? Are they really to just kind of help me survive? Because that's how I lived before I started doing my PhD. I was like, okay, money is there to buy me something to make my life more comfortable. And then I said, okay, no, I think money could be also used so that my life can make an impact in the life of others. And that was a big aha moment, number one. And I encourage you to kind of open your mind to maybe there's something about that money can be used for that. So second point that I wanted to say, savings. I was really astonished. So I was sharing a home. I was renting a small room in a 3-bedroom home with just some classmates of mine from other areas. And most of them were kind of like in the same shape as I am financially. Like, so I didn't have much money. I was earning everything that I was spending as a teaching assistant, as a research assistant. So I had some cash, but it was like barely enough to get me through the month. And my friends that were essentially living almost the same life managed to save. And I was like, wait a second, something is different here. And really, I lived paycheck to paycheck for quite some time. But after talking to them, after kind of seeing that they managed to save money from exactly the same paychecks that I was receiving, made me realize that they put more emphasis on longer term goals rather than just short term goals. My goals were like, make it to the end of the month, and then another month. So I was living month by month. My friends, on the other hand, were living like, okay, I want to have a vacation this summer, so I'm going to start saving since January. And this was very different from the impression I get that all Americans are drowning in credit card debt. No, not the case at all. It's the poorly educated Americans, maybe some of them, and with no disrespect, it's just, again, they might not know better. But really, if you talk about college level educated Americans, that's not the case. At least in my circles of people that I was with, no one had credit card debt. And this was something that people looked kind of like, okay, this is something that you need to fix because this is not a smart way of, this is not a healthy habit. And really people were saving. And I talked to some people, they were saving 30%, 50%, which motivated me again to rethink, to kind of plan ahead, think longer term, maybe just 6 months longer. That's already a first step. And so it's a second big aha moment. My whole life before that, I was really living paycheck to paycheck. So, and the third topic is stock ownership. So coming from Russia, where most of the businesses are owned by oligarchs, I thought, no, this is stock ownership is just for oligarchs. This is not my story. And then I realized that all the people that I spoke with, like older generation, said that their life savings are in stock. So they own shares through pension funds. And that made me think, so some people without higher education manage to invest in stock market and save for their safe retirement, and why can't I? And so that's when also the courses that I was taking at the university kind of gave me the background and the information to move myself into the investments. So that's not speculation, that's not day trading. This is long-term safe investments. Okay, let me have a look. Again, okay, so if this is clear so far, please type a plus into the chat. If you have any questions about what I just said now, I would like to take a just a kind of brief thing, brief moment to see where are you guys. Are you okay with what I'm saying? Does it make sense? I see pluses in the chat. Daniel, Artem, Nishta, thank you. Masha, thank you so much. The team, thank you. Konar, Aranza, wonderful. Thank you so much, guys. Okay, fantastic. I'm glad that you're following. Super. It makes sense what I'm saying. Okay. So next thing, SMART. So what are the SMART strategies? You might have heard this abbreviation before. You might be not familiar with it. That's whatever. That everything is like whatever states is fine. So SMART stands for specific, measurable, attainable, relevant, and time-based. This is an abbreviation that people say they recommend to have in mind when you set goals for yourself. No matter if it's just a writing goal for one day. So like, what am I going to write about today? Then the way I set the goal, it has to be specific, measurable, attainable, relevant, and time-based. The same exact intuition and logic applies to when you think about financial goals for yourself. Okay, so when I teach personal financial management to my through this project, or to actually I do teach also at the university a few workshops here, or to my friends, and how I learned it myself. So I had to educate myself essentially. I start with the first financial goal, which is a comfort pillow. So I'm saying safety pillow. I don't like that word. I like comfort. Comfort isn't like to reduce stress, to reduce anxiety, to reduce uncertainty. When I was living paycheck to paycheck, I was constantly worried that I would not make a rent, that I would not be able to pay rent. And I didn't have my mom's budget, deep pockets to rely on. So for me, not having, and like as an international student, I couldn't really have that. So for me, not being able to pay rent essentially meant that I will be thrown away on the street. And this kind of anxiety each month, oh, will I be able to make rent or not? This created a lot of background stress for me that essentially hindered my performance a lot. Like I couldn't think clearly. I couldn't focus on school often. So the first thing that I learned to do was to build this comfort pillow. In case I would make my target on earnings this month, I could draw from my pillow. And that made the most difference in my life, seriously, in terms of finance. So having this 6 months of expenses set aside as a comfort pillow to draw on in case there are some unexpected expenses really reduced my stress and improved my cognitive abilities, because I was feeling much calmer and much more able to focus on the things and actually look ahead. So there's this fantastic book called Scarcity, why having little means like matters so much. I can send you the link later, but it's a fantastic book telling exactly about that, how stress about money he kind of dampens your ability, kind of reduces your ability to solve even math problems, simple math problems. Okay, so how to fix that? Well, for myself, I fixed that through the 6 months of expenses comfort pillow. Okay, so how would you set up a goal to achieve that comfort? So the goal has to be specific. So suppose your expenses are like 300 a month, those expenses that you would like to save for. And so you say times 6, that makes it $1,800. So this is what makes the goal specific. I put a dollar value on it. Mm-hmm. Okay. It makes it tangible, it makes it very exact. So it's not something like, okay, I will save and that will make me feel better. It's this specificity that makes you feel like, okay, once I have 1,800, I achieved my goal. This is this feeling of satisfaction that you will get that is also reinforcing positive learning loop. So that's very important. Measurable. So I track my progress every month, and I will give you the instruments to help you do that as well. So you need to be able to measure how far and how close you are to your goal. So if you have 1,600 from 1,800, so you're almost there, right? So measurable is also very important. You need to see intermediate steps, how far you are to that. Attainable. So once again, I'm not saying that, so like for myself, I wouldn't put a goal of having $1 million in 2 months. That's probably not going to be attainable. And all I'm setting up myself is for disappointment in myself, in everything. So make sure that your goals are attainable in the sense that you wouldn't burn yourself by reaching them. And this is a very important balance here to find. How much can you save? How much can you earn a month so that you can comfortably put it aside to the goal? And again, even $50 a month matters, even $10 a month matters, even $1 matters. Over the years, you will see how it accumulates. So the most important thing is that you start doing something, and you will see how, even if you don't see the way of achieving it now, once you set up the goal, it's kind of like this visualization boards work. You open your mind to the possibilities that you didn't see before. Okay. Relevant. Again, this has to make you excited. Okay. And this is actually, if I could rearrange the words, I would put relevant as the number one important. Okay. So the financial goal, whatever goal you set, should come from your heart. Because when somebody told me, oh, Maria, you should save 10% a month from your salary, I was like, no, not doing that. My life is not about that. So when somebody tells you from the outside what you should be doing, that's likely going to hit a lot of resistance from you. Okay, because this is somebody else who is telling you what to do. Make sure that the goals that you set for yourself are really coming from your heart, and then you will have the energy, this desire, the relevance. This will drive you to make the important kind of steps to achieve that. This is your engine source. So R is very important, relevant. And 5 is time-based. So once again, once you know that you will have, say, 100 a month of savings, it will take you, you know that it will take you 18 months. So it's not a project for a lifetime. It's not forever from now on, I will do that. It's just 18 months, I live like that. So it's a very confined in time project that you're doing. And maybe planning for 18 months right now to you feels like, ooh, super weird. I know, I'm like, I had troubles planning for 2 months. Sometimes I had troubles planning for 1 week. Okay, so this is all normal. I am experimenting right now with planning for 10 years, and that's hard. So it's all step by step. You build up to different planning horizons. Okay. So maybe your big goal is vacation. Maybe your big goal is a present to your family. My first big purchase was a washing machine for my mom. So we never had an automatic washing machine when I was growing up, and I always felt bad for my mom washing everything that was in our family by hand. And once I think I was second year in college, I started earning money with tutoring, and that's when I was like, yoo-hoo, big first financial goal. So think for yourself what it is right now for you that really gives you energy and gives you goosebumps when you think about this goal. And if you want to share with me in chat, that would be great. If you just write it down somewhere on your notepad, that's also good. So whichever you want. But just have this in mind, because that's what's going to give you energy for transformation. Because trust me, managing personal finances is not that easy. A lot of emotions come up. So I think it's kind of like with healthy food. Everybody knows how to eat healthy, but for whatever reason, not everybody does that. And the same with money. A lot of people kind of, I think, understand the basic principles of financial literacy, but not many people do it. Why the reason? There are a lot of fears that come up. And one of the important ones, especially when you're young, is fear of missing out. Okay? So your friends are partying, why don't I go party as well? Friends go on vacation, I want to join them. And this is really easy to get into this rat race of running for experiences, for more expensive phones, for more expensive toys, for something bigger, right? that is maybe driven by peer pressure, maybe driven by social norms and expectations, when you really lose track of, is that really where you want to go? And this is when I want to invite you or encourage you to bring back this R letter, relevance. So think for yourself, is that really where I want to go? That's the only recipe I have for resisting the fear of missing out. Because it's definitely affecting me, and I think it affects everyone around us. So I am definitely an impulsive shopper, so I can go on a shopping spree, and I learned to control this in myself, to kind of be okay with it. Sometimes it happens, sometimes I sabotage my goals, but I go back to it, and we're all humans. And my best advice is to be okay with it, that sometimes you are gonna spend what you saved for a bigger goal, and then you feel regret, and then you just come back to it. As long as you have a plan that you bounce back to, you are on the right track. And here I want to encourage you to plan, because failing to plan is planning to fail. So having some sort of a plan is always better than none. Okay. Tools. So I will copy something now into the chat, which is an Excel spreadsheet that sits on my Dropbox. This is the spreadsheet that I typically give to my students who learn budgeting for the first time in their life, okay? So I copied it into a group chat. So I myself use a spreadsheet that is very similar to this one. So there are two key ingredients in this Excel spreadsheet, okay? Let me share this one with you. Okay, so the benefit of the spreadsheet is that it's always yours, right? So it's not an app, you don't have to pay anything extra for it. It's just yours to keep, and yours is always, it's always kind of like you, and you can modify it the way you want, okay? So what I have here, I'm just gonna briefly go over this. I encourage you to take it as a tool, kind of a toy, and play with it. See how you can adjust it for yourself. So the most important things, kind of the two important ingredients, is this annual tab. Annual tab has kind of expenses from every month within a year. So that's what I put in here, from January till December, and different expense categories. At the bottom, I have balances that I write out from all of my accounts. Okay, so at the end of every month, or at the beginning of every month, the way you want to do it is I write down, okay, what are my balances? What are my balances? What are my balances? So I fill out this table once a month, and I spend about 1 hour, okay? So in terms of time commitments, it might sound like, oh, that's a lot, 1 hour a month, but it's actually not. And at the end of the year, you will really be grateful to yourself so that you have the record, so you can see where the money went. And if you need to adjust something at the end of the year, okay? So once again, this is an annual tab, and we have, for each month, we have a column. In these columns, we write where we spent, so how much you earned, and how you spend the money, and what were the balances on your accounts. Okay. From the monthly tabs, so what do I have on the monthly tabs? I have, oops, some Russian language. Yeah, I'm teaching this in Russian typically, okay. So there are amounts that you kind of, this is the monthly expenses. So I spend some time during each day to write down every single expense that I'm making. And it might sound to you like a daunting task. Oh, write everything out that I'm spending. Trust me, it's not, it's just like a habit of flossing your teeth or brushing your teeth or drinking water. It's when it becomes your second nature, it doesn't require as much energy and concentration. So I would encourage you to definitely consider doing that. Okay, so this is category. So for example, if I put food in here, it automatically calculates, puts food in there. So essentially, this is like there's a little bit of coding in there with the spreadsheets. Okay, and then it automatically links it to the annual sheet. Okay, and I have a tab like that for every month. So you write down expenses at here, and then it calculates things over here. And then you have an overview of what it is. Okay, so once again, this table has a lot of stuff going on in it, and I do encourage you to study and explore it. I will not have the time to do a full tutorial on it right now, but if you're interested, feel free to ask me questions over email or something. I'm happy to answer them. The front tab is what I use for planning. Okay, so this is where I set my budget. And one of the key things that I want you to think about is that there is a budget for a month, but there's also budget for a year. Especially when you are grown up and you have your apartment, you have your car, there are a lot of annual payments that come at the annual frequency. This is really helpful to plan them out ahead of time so I can provision for them, like budget for them. And then there is a monthly budget. And I always like this last category in it. This is kind of the fun money, disposable money, the money that I can spend freely for my joys, for my impulsive things. And I encourage you to kind of think about this when you budget. When you make your plans, always give yourself some breathing room. Do not make sure that you have money for entertainment, money for impulsive shopping, money for something that makes you happy in the moment. And I know it might sound to you like, oh, I have this big salary coming from my job. It's easy for you, Maria, to say, I am barely earning my money. And I struggled a lot in my college years. My classmates had personal drivers taking them to school, and I couldn't buy a chocolate bar. So I know it might sound arrogant of me to say that you should have free money, but really, from whatever budget you have, always make sure that you take care of yourself and give yourself just a little bit, at least a little bit of wiggle room. And it helps with whatever the size of the budget you have. Just to make sure that it's sustainable. It's not you're not over managing yourself, over putting yourself in a too strict of a casket. Okay. So that's tool number one. I can show you actually what I plan to do is show you what it looks like for me without the numbers though. So what this plan looks like from how I adapted it to myself. Okay. So this is my annual tab. I typically do it by 3 months. So I have a 3 months, a quarter, and then this is when I typically transfer money to my broker account. So I invest about every 3 months. And then I do like a summary. And then another 3 months, and then a summary again. And another 3 months, and then a summary again. And another 3 months, and a summary again. At the bottom here, you will see that I have a lot of accounts that I have to keep track of. Again, because I lived for a very long time in Europe, I still have some connections and some investments in Europe. And I also, my mom, my family is in Russia. So I also have some accounts in Russia. And now I live in the United States. So I really live like three currency zones, three countries essentially. And so it's a lot to keep track of, and that's the only way I keep track of these things. Okay. In terms of the month, how I do it, I do not actually write things myself by hand. I have an online banking system where I export things out of. So for example, this is what the export will look like, except the money would be here. And then I use pivot table to summarize it. And then I put it into like categories that linked then to my annual sheet. Okay, maybe it's overloading you with information. Maybe you can give me a hint of like, okay, are you following? Are there any questions? I would appreciate some pluses in the chat if things are fine, or some questions. Alexander, second table, could you show it us to second table, this one, this second table, please let me know. Daniel, following, There are questions. Okay, questions in the Q&A. Okay, thank you. I see some pluses. Okay. So I see 3 open questions. One about real estate, one about debt, and one about choosing shares in the unstable market. I will get to more to real estate and markets a little bit later. And I will address this question of debt, positive cash flow covering the interest payments. One thing to think about here is risk. Okay, so if you're talking about an education loan, like a student loan that you need to take out to make you to put yourself through college, I think that makes sense. Yes. I also much more kind of positive on accounts of taking mortgages, right? If you need to take a loan to buy your place where you live, and this is you think it's wise, I do think that it's a legit investment. Now it makes sense to take a mortgage. Now about what is important, right? Sometimes banks offer you like loans to take out and then invest them, and then you think like, oh, I'm gonna just, it's called margin trading, and it might look like you're making positive cash flows. So say your interest expense, well, in US, it's like maybe 2% right now, and the stock market been going up and up and up. So a lot of people took out money from their accounts and invested in the stock market. And it looks like the cash flow is covering interest payments, but you're subjecting yourself to a lot of risk, okay? So it's not that the cash flows need to cover interest payments, it's that they, in the worst case scenario, they need to cover interest payments. So if the market crashes, you need to make sure that you still have the money to repay, and that makes sense. And this is a very hard bar to pass. So I never invest borrowed money into the market. I never do margin trading. And I've been doing, so my investment career is like 10 years or something. I would never recommend to anyone do it. Even the very kind of hedge funds that are very risky are very careful about margin trading. They put a lot of like stop loss strategies and kind of things in place and monitor it very carefully. So borrowing to invest in the stock market or any other strategy is a very risky idea. Make sure you understand the risks if you do that. And I mean, like all the nuts craziness about Forex trading, this is just speculation, this is gambling. This is not investment. Okay, so let me stop with that one and just talk a little bit more about the tools that I wanted to give you, and then I'm going to jump on the other investment questions that I received. Okay, so in terms of the phone apps that help you kind of track expenses, CoinKeeper is my favorite. It's beautiful, it's simple, and even the full version is super cheap. Okay, I do highly recommend that. In my, so what I personally use for my US expenses is called Personal Capital. It's free and it's automatic, so it connects to my credit cards. Now you might think, oh, I don't need this budgeting. This is just kind of like for poor people, right? Actually, no. If you start investing without good budgeting skills, it's kind of like carrying water in a cup that has holes in it. You're not gonna make it. Trust me. If you don't cover your bases, you're not gonna achieve your financial goals. The money is just gonna disappear. And I can totally relate to that. It happened to me a few times. Money just kind of like, I spend it, I forgot what I spent it on. So make sure that you do cover your bases before you start investing, okay? Okay, I think we are ready. Any questions about instruments that I can take? Please let me know. Mm-hmm. Uh-huh. Okay, so I'm waiting maybe in the chat or in the Q&A about instruments. So I just want to close this topic. If there is anything that you want to know about that, and then if not, then I'm moving to investment advice. Okay, so kind of like, what would I say to in terms of investment rules? Okay, I don't see anything in the chat, so let me just continue. Okay, so when I invest myself personally, almost all of my investments, except a few percent, and I will tell you where this is also, is S&P 500. Okay, so what is S&P 500? It stands for Standard & Poor's, and it is over the last 100 years, it was approximately giving us 10% a year in dollars, again, averaged over the last 100 years. There are years when it goes up 20, 25%. There are years when it goes down 40%, like 2008. It was a bummer year. So it's very volatile. At the same time, for me, it's the most reasonable investment. In financial theory, we say that it's really hard to beat the market. It's actually literally next to impossible to beat the market. So what does it mean, beat the market? Beat the market means to get a return above Standard & Poor's return, approximately Standard & Poor's return, without taking any extra risk. Okay, so important thing is this risk return. Larger risk, right, gambling, larger returns, of course. But if you want to be safe, if you want to be kind of prudent in your investments, the best alternative is S&P. Conditional on how much return risk you get in. Going above this market return is a super hard project, okay? And very, very few hedge funds can do that. Forget about retail investors, okay? So in terms of risk and return trade-offs, S&P 500 is the best alternative. So what is S&P 500? It's the 500 largest companies portfolio. And so people around the world can invest in that relatively easily through exchange traded funds. Okay, so how do you do that? Well, you get a broker. One of the most well-known international brokers is called Interactive Brokers. They recently lifted a minimum amount of balance. They used to have $10,000 minimum investment. Now they allow you to invest, I think, starting like with a few $100s. Okay, they do have a cost of maintaining the account. I think it's about $10 a month, something like that. But it's still a very easy access. They work around the world to US markets. So with Interactive Brokers, you can open an account and buy shares of ETFs. So invest in the S&P 500 through US markets. Okay, so you get all the benefits of regulation, the safety of the providers, everything, right? And the one share of the S&P 500 costs around 300 right now. So that's essentially the minimum bar that you need to jump over. It's not 10,000. That's not 1 million as an introductory, because of kind of the minimum amount that you need to invest in hedge funds. So it's very accessible. Okay. The tickers I gave you here is VOO and IVV. These are the packages from a very good management firms that I know that are leaders in the market. They're very trustworthy. And the commissions, fees on them are very low. So this is where I keep most of my money. Now, buying real estate, again, this is a very kind of tricky question, because first of all, real estate is a big, big, big investment. Like in stocks, you can invest $1,000, you can invest $2,000. In real estate, you'll probably have to go with like $100,000 or maybe $50,000. If you don't have, it's a commitment, it's a much bigger investment. So it makes your portfolio way less diversified. I do own real estate, but this is my real estate is in Russia. So it's much smaller kind of value and much smaller part of my portfolio. I am contemplating investing right now. So it's something that you need to kind of see where you are in terms of the life situation right now. I would say that if you have to invest everything you have and kind of really work hard to make this real estate investment happen, maybe try to be balanced, more balanced. So not only real estate. Okay. So this is as much as of advice I can give you from my personal experience. Choosing stocks in the unstable market during a recession. Again, I'm investing only in, I don't do stock picking, because once again, stock picking never beats the market over the long run. So if you look at mutual funds that do stock picking, they are incredibly underperforming. Okay, so once you look at kind of are there really consistently good stock pickers? Not really. Not really. Invest in the market and don't even bother and don't waste money and energy trying to pick the right stock, because you will be doing a lot of effort for maybe not as much of a return. So my solution, invest in S&P 500. And again, I learned it from my advisor. My advisor was the president of the largest 3 finance associations in the United States. He was really the best expert out there on investment advice. And he was doing the same thing. And I'm like, well, maybe leave yourself 3-5% of your portfolio to play with some things. Sometimes I'm really tempted to make a bet on a stock. For example, when when Facebook had this scandal with the data use, I bought Facebook. I did make some return on that. Same about Boeing. But again, these investments, they're like tiny little fraction of your portfolio just to play with. That's how I think about it. Don't do stock picking as the main investment strategy. No. I would really strongly advise against that. Okay. If the starting salary of my major is $50,000, would it be wise to take a $40,000 educational loan? Again, this is something that, like, I do recommend you take education, right? So for me, education has the lifelong benefit of a better career and better social environment that you will be in, okay? So for myself, I wish I had the option to take a loan, okay? So my first salary I was 27 when I graduated school, right? So I was my first job out of school, and I was like earning, I think, like 55 or something. But then again, in a few years, my salary started increasing because I started getting different contracts, okay? So looking back, if I could take some educational loan to smooth out my worries, my inability to kind of like worries to, will I make rent or not? I would have totally done it. But again, it's your kind of thing. I always say, if the only way to take it through college is to get a loan, do it. Typically that makes sense. Everything that I've seen, it does, because it's really hard, especially in US and the developed world, to make a career without college degree. So again, I value education a lot. So for me, it does make sense. Financially, depends on the terms of the loan. If you're in US, there are a lot of flexible payment plans. So yeah. And again, I was 27 when I was earning 55, I think. And it's not the end of the world, trust me. It's, if you have the passion for your job, you'll grow along the career ladder rather quickly. Mm-hmm. How do you suggest getting into debt if it brings positive cash? Oh, I think I answered that one. Should I choose, how should I choose between index funds and ETFs? I do not do index mutual funds much. I do mostly ETFs. Some of my money are in actively managed mutual funds, but only through the pension accounts that I have here. So I prefer ETFs just because it's easy to get in and out. I know that with the index funds, it's not a market transaction, so you have to kind of like directly transact with the mutual fund, and I don't see a good reason. Like, the ETF universe is so vast nowadays. So there's this webpage called ETF Database. It has a lot of information, all sorts of ETFs, and it's free. So ETF Database. And there is a ETF for every weird investment strategy you would think about. The one that I do invest in besides the market is called Momentum. It's a factor investment. It's a bit of a kind of more advanced topic. There are a few factor strategies that are shown to give superior returns, conditional for risk above market. So it makes sense to invest, but just for me, it's less than 10%. So Momentum is one of the strategies that I do invest in. Okay, for a recent college graduate, do you suggest diversifying portfolio first and invest in real estate in order to achieve financial freedom? Okay, so I hear a lot about this financial freedom. It's a good question, thank you. Especially in regards to this Robert Kiyosaki and strategies of like buying real estate to rent it out. If you really want to get into this, this is a profession. It's a separate job. Figuring out how to rent apartments properly, figuring out if like so that the cash flow from these apartments cover interest on your loan. I was doing calculations like that, and every time when I looked at the property market, it didn't make sense. Again, I'm not a real estate expert. So for me, it makes much more sense financially to invest in stock market. And that's what I've been doing mostly. So if you want to get like more into real estate, or you have friends who have expertise in real estate, go ahead. So for me, one thing I would like to caution you against is investing only in real estate. As much as I do caution you investing only in the stock market, I must say that I have some money just in my kind of saving account. So not everything that I have is invested in the stock market is in S&P 500. Even though it's most of my money, I still have some left in my savings account. Again, this is because I had a question, I received a question, how much to bonds, how much to stock. So in US, investing in corporate bonds is a much more complicated problem than say in Russia. Corporate bonds in Russia are traded on exchanges. In United States, they're not, they trade over the counter, meaning that it's only for big funds that can buy them. So I have an investment account, saving account, online saving account that earns me good interest, and I'm fine with this. I think it's a bit more than 1% right now of that interest. Maybe less, I need to double check. So it's interest rate is varying. It's not a big amount of money. I don't feel like I'm losing much by not investing it in bonds, and it's easy to get it out, really easy. And in terms of the brokers that I use in the United States, I use Robinhood. It's a local broker, no commissions, no nothing. I have some assets there in the market. So stocks versus bonds, some in the savings account I have. I don't own much corporate bonds, neither government bonds, but I'm relatively young, so typically the older you get, the more close to retirement, the larger is the fraction of your bonds in the portfolio. I think I have quite a few decades before retirement, so I don't worry about that much. Okay, so I think
yeah. Thank you very much, Maria. That was a very a very inspiring talk with a lot of information in it. I really hope that you will share your slides with us and all the materials that were provided. We have a few more minutes left, and we have very many questions. Maybe we should schedule another meeting about personal finance, because people want to know, and I personally actually have many questions to you following this talk. So I will take this 7 minutes to ask maybe 2 or 3 of them, but I hope that we will continue sometime afterwards. So your talk was mainly divided into 2 parts. First about the personal finance thing, and then about investment. So the first question, and it actually came up in our form for questions, which was allowed. Which was available during the registration. So, okay, there is a lot to do to organize your personal finance. So this Dropbox spreadsheet was amazing, and I hope that everyone will introduce some sort of this personal finance management. But what if you do nothing of this? It's very hard to implement actually the whole system, especially if it's not your own system. Maybe most of our attendees are high school students, so they don't manage a lot of their personal finance actually. What they can do is they can, following your talk, they can advise their parents and following their knowledge that they get elsewhere. So what should be the first step to make your personal finance organized? So what is the first thing that a person can do to follow the path of which will eventually lead to organizing the personal finance?
It's a very good question. Thank you, Daniel. Yes.
Thank
And
you.
I know that it's hard to manage your money when you depend on somebody. So when parents decide how much money you get, and maybe they will decide what you can spend them on or not. So I never had pocket money. So for me, when I went to college, it was like, oh my God, it was overwhelming. Now I have to manage my own money. Like this was a hard crash. So what I would encourage you to do is to study yourself. So this would be the first thing I always, doesn't matter who come to me for advice, I always tell them, first study yourself. So be this kind of like observant Sherlock Holmes, and take yourself as a object of observation. And through this 1 month, try to see where do you spend the money. And I understand that maybe it's your parents who spend it all and make those decisions for you. Then just keep track of those decisions, and maybe next month try to see where you would have spent the money on. So if you had the freedom to choose, how would you have reallocated the funds, right? So study yourself, study what you want, so that you know yourself. If once you graduate, once you go to college and will have to make financial decisions for yourself, you will face this decision head on, right? And it really could be overwhelming. So prepare yourself for that by kind of being open-minded and studying where do you spend the money. And I actually have a journal that I keep, and it's a paper journal. So I'm really old school in that. And I just, the way I started with this, I was writing it down with a hand, like on a pen and paper. Where do the money go? Like, and again, if the food is covered by your family, they cook for you, right? So whatever little expenses that you do, say buy lunch at school or spend on public transport, just these little expenses, keep track of them, accumulate them, and see how you can arrange them. This is your first budget. And then so I had a few teenagers that were taking my courses, and I was actually talking to their parents. They first took my courses and then sent their teenagers to me so that they could learn it kind of as early as possible. So what I would encourage you to do is to look for some earning opportunities, and kind of set the goal first for yourself, and then see if you can earn some money to reach that goal. And again, of course, pre-agree that with your parents that they approve of that. So I had a summer project of, I wanted to go for a small vacation, and I was mowing lawn entire summer to do that. And this was the first thing I did. I couldn't manage my money, but within that particular little project, my mom gave me the freedom, and this was, I think, very important. So start small, start with pen and paper, start wherever you can, just keeping track of things. Yeah.
Cool.
Small goal.
Is there a book that you can recommend to read in order to learn how to organize your personal finance? Or any resource that you would recommend, apart from your courses? Of course, they are perfect, I guess. But yeah, but that's a pity. But so, what if a person who doesn't speak Russian wants to learn about personal finance, wants to read something or listen to something? So where to start? Is there your favorite book?
I never had a book. I was really doing by trial and error, and kind of trying to see what works for me, because I had almost an allergy by the time when I was in when I faced all the financial problems. I almost had an allergy to anything, all the advice I was getting, because it all sounded so kind of not like me. So people were saying like save 10% and save this much, and the rent should be approximately 1/3 of your salary and things like that. And this sounded to me like coming from out of the blue, and I didn't want it. But it's a good question. Thank you, Daniel. I will have a look at what is there on the market right now with my new.
And maybe as a follow-up, we can distribute something. But what do you think about Burton Malkiel's Random Walk Down the Wall Street book?
Say again?
Burton Malkiel, Random Walk Down the Wall Street. Do you know this book?
No,
Oh, because
unfortunately.
it's my personal favorite, and it's actually coincides very much with your advice to invest in S&P 500 rather
Yeah,
than picking stocks. So that's what I recommend personally if someone cares about my
yeah.
opinion. Okay,
So thank
so
you.
thank you
Mhm.
very much. It's been 1 hour since we started. We have the tradition to start on time and to finish on time. So we will finish on time right now. Thank you very much, Maria. I think a lot of questions left undiscussed. So maybe we should schedule one more meeting. I'm telling my team who is responsible for scheduling meetings. Maybe we should have one more team with Maria, more about Q&A, because there
Sounds
are
good.
many questions. Yeah, many questions that people want to know about personal finance. And
Mhm.
there are more fundamental questions like, what do you think about Bitcoin? What do you think about the future of
Oh,
the financial system? I didn't even dare to ask,
I'm
because
very
I know that there can be
opinionated
another
about that.
lecture. Yeah, that's so we will discuss it some time later. Thank you very much. I think this was very
My
interesting. There was a
pleasure.
lot of information, a lot to learn from your experience and
Mhm,
your personal experience as well as academic experience.
mhm.
So Masha, thank you very much. Thank you everyone for coming. This was Maria Chaderina from the University of Oregon and the International Economics Olympiad meeting. Follow our Facebook page, follow our Instagram to get notifications about future meetings. Thanks everyone for coming again. Goodbye.
Thank you so much for your questions and for organizing this.
Yeah,
It was
thank
my
you.
pleasure. Thank you, guys.